Hey folks, Nick here, recapping week ending 2/23, another epic week inside of an epic month. Alright, so let's start with Friday. Actually, let's start with something else. Yesterday in the recap, I shared 3 things I needed to see before markets could rally, the stock markets, that is. And number 1 was the VIX to die. I watched the VIX futures, it's VX, the ticker symbol on my platform. And today it did, to a certain degree. Second, I needed leaders to lead. Amazon was already doing its job. Apple was not. 174 was a lid. Today it took it and then some. At the same time, this died. 3 laggards to find footing, and there were 2 big stinkers this week. Walmart on one end, Roku on the other, and they both did well. And that started yesterday. And they shrugged off some sell-offs, especially Walmart. So this is a great way to start killing volatility as a concept and shut the talking heads up. They wanted the correction, they got it, and when they bounced off the correction they wanted, now they want a revisit of the correction just for no other reason that we got here too fast. That's not a thesis. We got here too fast because there was a reason to get here. There are still people who want it lower, so I still open myself up to the possibility that, okay, we may still revisit the lows. But it's not my thesis, it's theirs, but I'm aware of it, so I have to be kind of ready for it. Bottom line now, onus is on the bears to show us that they can kill the bull and the enthusiasm. Now, the fact that the bulls opened kind of shy, got to the limits, the upper limits, and then took that final step up in the final closing hours and in the face of a weekend, usually they want to let loose of risk into the weekend. This is a big statement. Maybe it's a fake out. I don't know. So let's see what Monday brings. All right. So how about the VIX? So the scoreboard was big, 1.4%, 2% almost on the Nasdaq. I'll put those in. This is what it looked like. Hardly any red. United Technologies and GE. Well, GE is a stinker. I don't know what's the deal with UTX. But anyway, so this was the week. That was the correction. 1 week, second week, completely rejected the bottom, and then 2 green weeks. And here we are, halfway through here and here. So if you say this was an overshoot, this is an overshoot, somewhere in the middle lies the truth. So if I draw a line like this, look at where I get. So back to just a bullish market. Uber bullish, uber bearish, somewhere in the middle, maybe lies the truth. The Nasdaq is even better shape. It's close to its all-time high. It rose faster just because of a few names in there, Amazon and company. And keep that in mind. There's rhetoric on that side too. Now they're going to talk about flipping from tech, so because it's overpriced. So this was the small caps, kind of like the S&P. So no strange. There's no reason why being here is super high, because we were a lot higher, we were a lot lower, and somewhere in the middle is going to lie the truth for the short term, midterm even. All right, so the week is definitely for the bulls. It looked iffy. What about next week? Next week we have all kinds of stuff, but I want to concentrate on just a few things. Number 1 is Fed Powell speaks on 2/28, I believe. I don't know what time. Look it up. That's the new guy that replaced Yellen. What the stocks want to hear, Wall Street wants to hear, is that he sounds like Yellen. So far, everything sounds like he sounds like Yellen, but we don't know what he sounds until he speaks, right? So we want to know that he's on board. With what? With the fact that he won't go crazy raising rates just for the sake of raising rates. That he's not Jean-Claude Trichet. That he's not, that he's more like Ben Bernanke and Yellen. All right, so that's most important. Also, we have GDP, I believe, and all kinds of other reports for the economy, so that's important. Sometimes, and maybe this is one of those times, really good reports there are not good for the stocks, because then that supports the fact that the Fed is likely to push harder with the rate hikes. And with their QT, quantitative tightening, which means they sell off assets. Okay, so we don't want to see very good reports there for now, because bad news is good news and good news is bad news for now, until this fear abates. Okay, there are earnings too, mostly in the retail sector. I think something like Target, and then Macy's coming next the week thereafter. Costco also. The biggest one, Walmart, delivered a stinker. So maybe all the bad stuff went with Walmart. Maybe these guys will get the benefit of the doubt. I'm not happy with retail. I don't think they got their act together. They've been messing up for 10 years, and now suddenly they figured out the formula how to fight Amazon. I don't know. I'm skeptic, but I'm not shorting them for that reason. All right, so let's go with levels. This is the S&P. These are the E-minis, so think SPX, but not really. These are the futures contract. So today's candle, emphatic, right? This is a daily chart. Every candle is 1 day. This was the correction, and then when they started rising, I drew these purple lines, and I said breakout 1 is going on. Breakout 2 started, then failed, but I said there might be a J-hook pattern. Well, this goes along really well with that J-hook pattern, and the fact that if they can beat this line right here, not easy, because look to the left. Big red candles, that's the big ledge from which we fell. Crime scene, also crime scene from which we sprang. So it's going to be pretty important, so note that. Okay, that's an important line. But if they can break it, then the bulls will overcome the bears, and they probably will hit 2790, 2800 in the next few weeks. So I would not short this market until I see what happens here, and if I see them close above here, I'm a buyer of the rally, because this step would be in play, this purple step. So confluence of a couple lines, I like it. Why not? All right, next we'll have the Nasdaq. These are the Qs. Similar situation, kind of a crime scene, but closer to all-time highs, so we might find resistance. I would rather bet on this one than that one, and just because of some of the rhetoric that you're going to see, oh, sell tech, they're too expensive. They're not, but because they see tech as Amazon, so they're afraid of it. Anyway, maybe they're right, maybe they're not. If they do sell tech, they're going to rotate into something else, under the assumption that the bears are done for now. That's all under the assumption the bears are done for now, okay? Otherwise, just sit it out and see what happens. Small caps, kind of like the S&P. This is the IWM. Crime scene. Yeah, crime scene. That little square rectangle here. Look to the left. Definitely crime scene. Back to the crime scene. So this could be upside target, if not higher, if they can overcome the crime scene. So these are not easy. These are hard-fought battles. All right, so what about crime scene? Who's the criminal? This was the criminal. That's perfect. I didn't plan this out. So this is the criminal here, the 10-year rates, the 3% boogeyman right there. Okay, so this is the TNX. That's what it represents. So TNX and TLT go in opposite directions. One actual bond prices, and the other one is ETF for bond. This is the representation of the rates. So if rates go up, the prices of the bond goes down. That's how it works. So obviously had a huge drop to where the crime scene. So the criminal is back to the crime scene from which he sprang. Right. The spike was somewhere here. On that really good report, the wage inflation was high, so it was a good jobs report. The criminal was like, "Oh my gosh, we're getting to 3% so fast!" Blah blah blah, and we abated. So now what? Is this going to be a base from which to spring higher? That could scare people. All right, so criminal is off the line here. All right, a representation of the crime itself is, let's take that whole spirit of criminal crime thing, is the fear gauge, volatility. You've heard it as the VIX. This is the VXX. It's another form, it's another derivative off of fear, volatility. I watch the fear future, which is the VX, which is the purest form of it. These are all derivatives of it. So look at that. This is an inverse cup and handle ish pattern, meaning they're testing support. If the support fails, and that is an ugly failure candle, then they could the stock bulls prevail, meaning this will fall. If you're a bullish, the VXX, you're bearish stock markets, because this was the correction, and now they're. But look, I mean, if I extended this is designed to go to zero basically, because it's just straight down. And this was done on high volume, and this is a big candle. These are weak hands, so how quickly will they sell off their protection? Okay, I can't tell you, but if this floor opens up, it's a trap door down to lower. I don't remember what time of day I took this picture, but regardless, it was an ugly close for the bears from that perspective on the VXX. I bought puts into the VXX as a lottery ticket. I'll include it in the write-up. I'm basically saying if it crashes, if it falls, it's going to crash, and the open interest shows that it could for the next couple of weeks. But the monthly, the third week thereafter, the open interest says the opposite, saying no, volatility has support. So, just I spent pennies for a long shot lottery ticket. I'm looking to lose my money unless I get a miracle. Tesla is an upside potential. Watch for a breakout over here. I would chase the breakout. If I'm long Tesla, I'm not getting out of it. I'll also, a debit call spread at the money out to March, maybe even April, we'll probably do it. Maybe $2.50 wide, so pick a weekly so you can get that so you don't risk a lot of money for it. Tight stops, meaning if I start losing money, I don't like it, I can get out of it. Another trade idea was Baidu. I recently shared one as a complete home run. So I took some of my profits and re-upped my risk, saying, okay, technically, this little tiny guy here could come to fruition. Now, I have to warn you that I would put tight stops on it because the open interest in Baidu is not conducive to this rally. It more so says, okay, it could fall towards 242, 243. Not a forecast, but it just, the way the options interest is open right now tells me that it could fall. That was a second trade idea. This was another complete flyer trade idea. Today, out of the blue, Blackberry is spraying up 4 or 5%. I didn't even remember that they were still in business. Yes, they are. So anyway, I could sell puts at $10 for Blackberry and collect a whole bunch of money for it. So, but if I sell puts at $10 for next January, so basically these are leaps, I would commit myself to buying Blackberry at 10 if it falls below it. So if it crashes to 9, that would be my break-even point if I looked at it last time correctly. So I could sell those and then spend a few pennies buying protection throughout half the year. So I sell these, collect $1, whatever it was paying. I think it was 95 cents or something like that per contract, which is a whole lot of money for not a lot of risk. And but to protect myself, I would spend, let's say $1, I don't know what it is, to buy a put for, say, half the year. So between now and half the year, if it crashes, I don't lose anything because I'm partially protected. Okay, so that would be one trade idea. But again, I don't know the fundamentals of BlackBerry except that they have a lot of intellectual property, meaning a whole bunch of patents that they could sell off. And they say they're into the car business or something like that via some software. Hey, I have no reason to distrust them. The CEO sounds pretty confident. All right, finally, Amazon represents everything bad about the bull market. Okay, this is, I don't know, monthly chart on Amazon. This is like 1990, this is like 10, 11 years ago. So if the trend line had drawn from over there, look at where it pointed. People have been shorting it from here. So why continue short it? I mean, I don't understand. They're shorting it for the sake of shorting it. This is the ultimate growth company, and it's not losing money. It just runs thin because it invests every penny it makes into growing more. At any point in time, should the hit the fan, it dials back to spending, and it becomes profitable again. A lot more profitable. So I don't know why they keep insisting on shorting it. I don't short this beast. I bet you this will be over 2,000 by the year end. You could play it that way, but I definitely don't short it. Pick another gazelle that's limping. This one is just leaping. I would not short it. So this is it for me. Again, there was a crime that was committed by the TNX, and here we are now revisiting the crime scene, the biggest one really, from which we fell apart. What happens next is up to the headlines. So CNBC, unfortunately, is, they complain about leveraged ETFs and how nasty, like the UVIXI or whatever, SVIX, XIV was that launched everything, as damaging to the stock market. They're more damaging because they draw these invisible lines in the sand that, oh my gosh, the world's going to end as soon as this guy speaks, or as soon as the report comes out, or as soon as the job market comes out, a job report comes out. So they create this frenzy over this, and the sheep, the herd, us, the retail, whoever is trading, they listen to CNBC, only gig in town. So it's like leveraged media. So anyway, luckily we have a thesis that we trade, and if things go against the thesis for whatever reason, we evaluate the thesis and see if it's still correct, and then we trade accordingly. Nick signing out.